Welcome. I'm your host, Henri and Stephen, and welcome to the Future Money Podcast. My goal with this podcast is very simple. It's to go deep in some of the biggest idea trends and developments we're seeing in the field of crypto, and hopefully empower you with this information, and then let you make your own decision on what their impact could be on the future of money and the future of finance. And to do this, I invite each week one of the leading figures of the global crypto community to have this one-on-one conversation amongst crypto aficionados and discuss some of these topics. Before I introduce my guest today, if you like the show, please make sure to click subscribe so you can be notified whenever a new episode is coming out. And if you want to support the show, please make sure to give it a 5-star rating, as it really enables others to discover the show and for more people to learn about the crypto ecosystem. I'm very excited to introduce my guest today, Stephen Stonberg, the CEO of Bittrex Global. One thing you may not know about him is that Stephen has been probably one of the earliest people that I know in the field of crypto that moved in from the traditional financial world to crypto, and we'll talk all about it today. Stephen, good to have you today on the Future Money Podcast.
Thank you. Pleasure to be here.
Stephen, there's so many topics I want to talk with you about today. But before we start, do you mind sharing with the audience a bit of your background, and especially what you do now at Bittrex Global, but also how you got into the field of crypto as well?
Sure. So my background, I worked in traditional finance, mostly in London, a little bit in New York. I started out after college, I did M&A, and then after business school, moved into sales and trading. I worked on dealing floors in London, mainly in credit derivatives, which was like crypto at the time. That was new and cool in the late 90s, but and kind of cutting edge, not so much now. And then sort of did that for many years, and then moved to the buy side. I went to work for a hedge fund called Brevan Howard in London. I became a partner there. They moved me back to New York, and then I stayed on the buy side. Did a few other firms, like worked for a quant firm, and then my last sort of gig in traditional finance, I was at Goldman in asset management. And then crypto, this is 2017. I sort of, caught the end of the first. It was hard not to notice that. And I think more than most, I didn't just see it as like a speculative bubble. And, Goldman at the time was telling all the clients, like, this is toxic and horrible. And, it's like the Dutch tulip bubble. And I didn't see it that way. I didn't think the story was just Bitcoin and ETH price. I think, the story is really, it's about blockchain. And if you understand all these banks, like their settlement systems and their infrastructure, none of it's compatible. It's all very creaky and old and just been kind of like plastered together with like spit and glue for like 40 years. It's like Bretton Woods, basically. And then you sort of think, well, here's this paradigm shift. Like this, to me, was like the Amazon moment for banks, like where the banks are Barnes and Noble. And I think I saw it very differently. I just, once I sort of see a new technology and embrace, like, I like things that are very disruptive, which is why I liked moving to hedge funds. At the time, those were disrupting the banks. Now they're just kind of boring asset managers too. So anyway, I dove right in. I went to work for a crypto firm, not Bittrex, for a few months. And then I moved to Bittrex pretty quickly. Thereafter, I knew I'd met Bill Shahara, actually, and other founders when I was working at Goldman. So that was the one good thing that came out of it. I met somebody running a crypto exchange, but I decided the crypto exchange was a lot more interesting than the bank.
Out of curiosity, Stephen, have a lot of your previous colleagues from Goldman reach out to you afterwards, now that they obviously crypto is more mainstream and definitely more sexy than it was a couple of years ago?
I think, I wasn't really at Goldman for very long. It was more, I think when I first dove in, nobody reached out to me. Everyone thought I was like working, crypto back then. I mean, especially, again, you have to really, it's hard to remember what it was like. But in 2017, I mean, it was like, you must be working in like Silk Road and selling drugs or arms or something. It just had this very completely, not kosher connotation to it. So I think, no one really reached out to me. Nobody really wanted to have anything to do with me, frankly. But I sort of dove right into this whole new crypto community, which I thought was really interesting. And to me, I saw it as just finance. I mean, this is the finance industry. It's just these people running it don't really understand what industry they've stumbled into, which is the most regulated on planet Earth. But it was really interesting. So it's mainly a lot of tech people and just very entrepreneurial people, very global industry as well from day one.
I mean, obviously, you mentioned Brevin Howard, and before we talk about other topics, I'm going to talk about, of course, Brevin Howard has been very active in crypto, right? Alan Howard with his family office.
Yeah, I think it's a complete coincidence. I mean, they seem to, I don't want to talk about, you can read what they're doing in the press. It's not my place to talk about that. But I'd say that it's interesting to see not just them, it's more the macro funds, because Tudor and, now Bridgewater. And I think because they get the macro trends that are going on. So it makes sense that they would be the first to kind of dive into a new asset class, understanding that, because it's all intertwined with what's going on with the dollar, what's going on with commodities, and how you have to do portfolio allocation. So they tend to see the new things first, just because that's what they do for a living. But I think for the equity long short guys, it's a harder. How do you put that into your portfolio? It's not equity. So, it'll take them time to figure it out. So, I mean, it makes sense that a macro fund could allocate to that asset class.
But do you think the current volatility that we're seeing in crypto markets and the current macro environment that we're seeing outside of crypto and the broader financial markets is gonna act as a catalyst to see more, let's say, traditional hedge funds, macro hedge funds enter the crypto space?
Well, I think everybody has to. I mean, think of it this way: just like what you had a certain number of assets you could buy. They settled through banks. Now you have a new settlement system which can take the old assets. Right? You can tokenize the old stuff, trade it on a blockchain, but then you have all these new assets that only exist on a blockchain. And maybe those are the new assets that you should be buying and allocating your portfolio. Again, like, why would you want fiat currency what is that? That's just like a promise from a central bank. I mean, what is a dollar? And do you trust the Fed? I mean, I think there's some fundamental things that people just take for, like, that's cash, or that's considered AAA, or that's risk-free asset. Is it? So I think you have to really question the entire sort of, the banks sell this portfolio construction, this traditional stuff to their high net worth clients, their institutional clients. So it's hard for them to kind of change their tune, especially when they can't really offer the blockchain products because of the regulatory capital constraints put on them. So you have this interesting sort of, setup. You can see where the industry is going. You can see that traditional assets are going to be devalued. Are the current offerings on the blockchain the right ones? Who knows? But you definitely need to start allocating away. I mean, this is the industry is moving in this direction. And I think if you don't, it's like when the tide runs out, you can see who's got their, shorts on, is the old saying. I think, there's very volatile times. I think having an asset like Bitcoin, which is fixed supply, where maybe that could be the new gold. I mean, it's unclear, but that seems to be what the market is sort of telling you. It might have that sort of principle.
A couple of things I want to talk with you, Stephen. First of all, obviously, as a CEO of Bittrex Global, right, about the crypto exchange landscape, right? Of course, right now, anybody that looks at the crypto exchange landscape, there's obviously hundreds of crypto exchanges around the world. From your perspective, obviously, you're running Bittrex Global. When you look at, say, 5 and 10 years down the line, do you think we're going to see consolidation between the players? Do you think we'll have, again, this kind of widespread amount of exchanges going on? How does the future of crypto exchanges look like from a industry perspective?
Sure. I mean, again, you tend to look at like business history. I think if you look in the 90s, there was all of these new startups, like internet startups, and then you saw massive consolidation. That's true in any industry. So I think you're going to see two things. You'll see consolidation within the crypto industry itself, and then you're going to see consolidation between the crypto industry, which is financial services, right? So it won't be even called crypto anymore. It'll just be like blockchain. It's just a thing that people do in finance. So will it be the traditional financial services players, or will it be these new startup firms that take over finance? I think that's kind of what is unclear. Amazon, again, like that is now the biggest firm, but in the 90s, that was like the startup. And did you think that would take over from bricks and mortar stores? No. So I think we just don't know how it's all going to play out. I think you'll see consolidation in both sides, and then convergence between the traditional and this. And then within this space, I mean, again, financial services are regulated. Like, those have been around for years, since like the 1930s in the US. So I think it's very naive of a lot of our competitors who just sort of do what they want and think, oh, well, until I get caught, I can do it. No, you're breaking rules right now. So I think there's actually a lot of, things going on behind the scenes. And I think you'll start to see more. I would guess you'd see more sort of enforcement against some of these practices, which are out in the open, but just not, if a bank did it, they wouldn't be allowed. But just because it's on the blockchain, it's still the same thing. Like, you're soliciting money from investors in different jurisdictions and selling them assets that could be seen as a security, and you don't have a license to do that. So it'll be interesting to see how that plays out. I think you're going to see a lot more of that.
It's actually on this point, right? Like obviously today, some of the largest crypto exchanges globally are not regulated, and they're offering a lot of products that, if they were a traditional financial institution, they would definitely need to be regulated. A good example are crypto derivatives.
They seem to be making a lot of money and spending it on a lot of things that unclear if that has value for their franchises, like sponsoring stadiums and things like that. I can't really comment on specific competitors. I think that again, if a bank did that, again, I just don't see how that ends well for anybody. For investors or in the platforms, for the users of those platforms, or it's just we'll see how that plays out. I think I can't speak for them. Like, there's enough players in the industry who do sort of agree that regulation is the way to go. I mean, like, obviously, it's not just ourselves. We're highly regulated. Bitrex's U.S. platform has multiple money servicing licenses by state, and then for Bittrex Global, we operate outside of the U.S. We're licensed under the Blockchain Act in Liechtenstein. That's an EEA member state, so it's EU bank regulator that regulates us. And we also have a full license in Bermuda as well under the DABA Act, the Digital Assets Business Act. Bermuda's UK dependent territory. That's like the world's insurance industry is there. So I think we've picked some pretty blue chip places to be regulated. I think that's the other thing. Some people, like, they've set up and they're regulated, but they're in places where the traditional financial services industry doesn't exist. So I think if you see places like the Seychelles, which isn't exactly where there's any banks or hedge funds, that's usually like a red flag. Again, I just don't, that's not a place where some of these other jurisdictions, we're in the places where you'd expect to see, like Bermuda is an established jurisdiction, Liechtenstein is a banking jurisdiction. So that's why we wanted to be in these places. We want regulation, but we want good regulation, and we want, AAA rating in Liechtenstein. We want very stable places where it's hard to get the license, frankly. If it's easy, then it's kind of not worth anything, right?
Absolutely. Actually, on this point, I mean, it must be always difficult when you see some of when you look at the market, right, and even the market share, you look at some of these exchanges that are completely unregulated, they're able to launch products, whereas in your case, obviously, you are regulated. You mentioned you're in Bermuda, you're in Liechtenstein, being compliant is one of your big areas of focus. How does it, like, it must be a dilemma internally always as well, right? Because you see the competitors doing this and you're like, oh, like, is it, you think being regulated and operating in a compliant way will be competitive advantage as the industry becomes more institutionalized?
Well, I just don't know how you can run the business without that. So yes, of course. Again, let's make the analogy of a bank. Let's say you have two banks. Let's say the fintech startup bank didn't have to do KYC, didn't have to do AML, could ever offer every product it wanted without any license and just do it globally. Okay, well, that wouldn't be a level playing field with people like JP Morgan or Goldman Sachs. It took them 100 years to build these platforms. And what's interesting about crypto, it's multi-jurisdictional and it's multi-product. So you're doing this like grid where you're in like multiple jurisdictions, each of which have its own rules. And then you're in like multiple products and they're all licensed differently. So you've like done something really complicated that, a bank wouldn't be able to do. They would typically pick one jurisdiction, get going, maybe one product line, and then they kind of grow over, like, it takes them years to do this. So of course you can engage a lot of customers, you can make a lot of money in this industry, but it's kind of, it's not like in the early days of Amazon when they didn't pay sales tax and fine, like, okay, so we'll figure it out. Like, you're not going to go to prison for that. I mean, violating securities laws or money laundering, I mean, these are like very serious financial crimes. So I just think that, like, I just don't know how that works and I can't comment on it. So I would just say that's not what we're doing. I think that we've for doing it in the right way, we're actually doing a lot. Yes, I mean, is it frustrating that it's an unlevel playing field? Competitors can do a lot more. Absolutely. I think long term, it's clear we will still be here. I sleep at night. Like, I don't know how they do that. But, I wish, again, I just can't comment on that. I just think that it's the investors, their employees, and the clients who are going to end up getting burnt and hurt.
What's your view on DeFi? Of course, we're always seeing there's more and more interest in decentralized exchanges. And, in many cases, users are starting to get more comfortable trading on DeFi platforms. Do you think we will have a day where DeFi exchanges will be serious competitor to centralized exchanges? And if yes, when do you think that can happen?
Well, I think DeFi as a concept is great. And there's a lot of really interesting projects out there. I think for when you apply it to the exchange world specifically, I mean, yes, it's great. You have peer-to-peer. I mean, peer-to-peer finance exists in the real world already. Like, there are plenty of places where there's peer-to-peer lending ultimately the organizer of the introduction is viewed by the regulator as running a platform. So I think that the regulators are going to have trouble with it. So I think it's great, but I can't comment on the I think the regulatory, how that they're going to try to like rope that in. It's always form over substance. So you can say that it's two people meeting in outer space in a vacuum and no jurisdiction and however you're running this thing. But the regulator will say, no, that's not how we see it. And we're going to enforce it this way. That's the problem. And I think that's where, again, people who have a bit more experience in this stuff know that's not how the regulator works. And you're liable. They're going to come and get you. There's nowhere to hide anywhere. There are a few places left, but I don't think in this day and age you're not going to be able to do what Mark Rich did and hide out in Zug. That doesn't even work anymore. That's like 50 years ago, right?
This episode is powered by Celsius, your home for crypto. With Celsius, you can easily buy, swap, earn, borrow, and send crypto all in one app with zero fees and the best rates in the industry. Weekly rewards of up to 17% APY and crypto-backed loans starting at just 1% APR with no origination fees. You can even swap coins in-app without paying gas fees or worrying about slippage. And if you need help, you can call them and get live support from an actual human. Visit the link in the description to get started today. Actually, you touched upon regulations, but let's say from a CEO perspective, right? What do you think is the biggest challenge right now in running a crypto exchange? Is it complying with regulations? Is it hiring? Is it the client acquisition? What do you think is the biggest challenge right now crypto exchange CEOs are facing?
I think I think that's not crypto. I think this is a crazy world we live in right now. I mean, it's hugely volatile. I think COVID and like hiring restriction, I think it's challenging to run any sort of business right now. I think crypto is more adept. We were already running very remote. It's sort of pre-COVID, it was always very hot desk, remote, people working from different locations. So I think it adapted really well to COVID, which is unfortunate. And I think COVID though drove so much more volatility and made crypto adoption sort of more interesting. So I think again, right place, right time. It just set up that way. I think in terms of the regulatory challenges, I think the regulators, even if you're in a jurisdiction where they've passed legislation and it's in the law, then the regulator has to enforce it. They don't necessarily want the rule or they don't understand it. And this is all still very new. I mean, again, we have a great relationship with the FMA and Liechtenstein, but before us, like they're used to just private banks and sort of, even though they have a lot of assets under management or big asset managers, they don't have that many clients, right? They're very high net worth or institutional clients. We have, we're fintech, so we have like a lot of clients, industrialized things. So, I think for them, it's, again, it's positive. It's the learning experience for everybody involved. So I think that's just one example. It's just unintended consequences. And it's great. And they obviously want the industry. They knew what they wanted to grow. And I just think sometimes, you be careful what you wish for. And it's a lot of work. So it's fun, but it's a lot of work. So I think, like anything that's good, you have to work hard and you'll figure it out. So I think that, I would say that there's a lot of things like that in other jurisdictions. Then obviously, if you're trying to apply securities laws to this, doing actual security tokens, like how is that going to work? You've got the jurisdiction where they trade, the jurisdictions where you sell them. That gets much more complicated, with utility tokens, which is all that we're trading mostly for right now, the majority of what we do. If that's a bit more straightforward and less regulated, or that they've said that it's not, we don't believe this falls into what we're doing, right? The problem you have in the US is it's unclear what's a utility token versus a security token. Outside of the US, it's much more clear. So I think we've had to bifurcate our business. I think the big challenge for the industry or for the US is that the lack of regulation has made the industry move offshore. And that's where the majority of planet Earth's people are anyway. So, I mean, Bittrex Global is, I think, personally, we're operating in the markets where we have the regulatory clarity and the clients, we can do a lot more. It's interesting. You mentioned security tokens. Obviously, 2-3 years ago, there was a lot of interest, a lot of enthusiasm about security tokens. How do you see the future of security tokens? Do you think they're going to become mainstream? You think we start tokenizing traditional financial assets? How do you see it from your vantage point? I think to start with, so if you take a derivative of a utility token, any derivatives like futures, options, like those are all by definition, you've turned a utility token into a security because it's a derivative. So the fact that it's a derivative, or it's like leveraged, or it's got something in it, the definition of that token changes. And that is a security. Just because it's referencing Bitcoin doesn't matter, right? So those are securities. Now, is everybody selling them as securities? No. And again, I won't comment on competitors. So we don't offer derivatives right now. We're not in that market. I think, again, because for us, we would know we have to get the right licensing. We could trade those right now in Bermuda if we wanted to under our existing license. But to sell those into Europe, we would need some sort of brokerage license, which we do not have. We're not licensed as a broker dealer or a bank in Europe. We're licensed as a crypto exchange. So that's utility tokens, not securities. So I think that there is demand for that. Over time, do I think that you'll see every asset on the blockchain and real security tokens? Yes, I think that's still a very new industry. I think NFTs, some of those could probably be classified as securities. I think that's so new that nobody knows what to do with that right now. I think the earlier use cases would probably be derivatives on utility tokens are securities, and some sort of NFTs, and then eventually you'll start to see stuff on the blockchain. I still think it's kind of like 2017 for that stuff right now.
Well, and actually on that point, you mentioned NFTs. What's your view on crypto exchanges and NFTs? I mean, a lot of exchanges now have started or are looking at listing NFTs. Do you think that's a fad? Do you think it's going to go away? When I mean, not NFTs, but I mean exchanges listing them, or you think it's just going to be another asset that a lot of these crypto exchanges are going to list?
So I think let's look at the technology. So remember, it's about blockchain. So within blockchain, I think there's four. It's like the 2x2 matrix, which our McKinsey friends from business school will love that. But I think you have there's two types of tokens. There's fungible tokens or non-fungible tokens, right? There's just two types, and then there's utility or security. So like you can fall into four buckets. Like you can be a utility fungible token, a utility NFT, a security token that's an FT or an NFT. So this is technology and categories. So what are the use cases? So right now we're seeing exclusively the use of NFT. And that just means it's non-fungible. Like that matter, you care which token you buy. So a dollar bill is a fungible token. Like you don't care which dollar bill you have. They all are worth $1, right? Doesn't matter. But let's say that you have a specific certificate representing a piece of property. You care which one of those you own. You want like the Park Avenue one or Beverly Hills. You don't want the one in the middle of nowhere, right? So that's the difference. So, the NFTs have been mostly used for digital art, shall we say. So is that all going to hold its value? Unclear. And that's just the popular use case right now. That doesn't mean that you won't start to see real estate and find, real world assets going into an NFT, right? So I think that, again, I think it's great that the technology is moving. It's still early days, and you just don't know when you're an early adopter if you're buying a fad or if you're buying something that's going to have long-term value.
Stephen, a couple of minutes ago, you were talking about how there's obviously a lot. If JP Morgan couldn't do a lot of things what crypto exchanges are doing today. Obviously you spent many years in the traditional financial space, right? What do you think are the aspects or the elements of traditional finance that you think the crypto industry would benefit? Is there anything that you see in a TradFi, in the legacy finance world, that you think actually the crypto ecosystem should listen or should learn from, and that would actually contribute to the growth of the crypto ecosystem?
I think that's the challenge, and that's the delicate balance we're always trying to. I think in what we're doing, you have to respect, like right or wrong, you don't want to mess with the regulators, and especially in the U.S. or in Europe, and it's just you don't want to get into trouble like that. So that's not going to be good for your business long term, because then if you care about valuation, people don't really like it when there's enforcement actions against your business. That's going to have an impact on what they value your company at. So that's just nothing you want to get involved in. So how do you keep this rapid, fun, interesting growth industry, and you want to attract a certain type of talent, but then on the other hand, you want to make sure that they're not too Wild West. So I think that's kind of the balance. So I think you want people who've seen the movie. And there are plenty of people in traditional finance who are very entrepreneurial and like to build and do things, but who've seen the movie and understand like the rules of the road. Like you're not allowed to do, they'll push the envelope, but only so far. And I think if you've not been in that traditional world, you just don't know those rules, which is why you see a lot of people, they've innovated because they just maybe they don't know the rule book exists, or if they are told it exists, they just think it doesn't apply to them because they live in outer space, or they live in no country, or whatever they think. By the way, that doesn't work. They'll say you live somewhere. So somebody will just, again, form over substance. It doesn't matter what your substance is. They'll tell you, actually, we think you live here and we're suing you anyway. And good luck. So I just think that, having a bit of maturity, applied kind of as your core principle, and if you can combine it with the innovation, that's kind of, I think, the winning formula.
But on that point, I mean, I would argue that one of the challenges you see with if people have been in traditional finance, sometimes they have their own ways, they're set in their own ways, right? Whereas if you look at the crypto, some of the big innovations we've had is because people came in and were able to think outside the box, were able to innovate, and they were not constrained by some of these limitations.
So I think that like any industry, I don't think it applies to finance. I think there's innovative people and there's not innovative people. And I think that in any company you would find that. So I think that again, the uninnovative people just call it rat poison, or it's like toxic and horrible, and they're just like ostriches burying their head in the sand, hoping it goes away. They're kind of like Barnes and Noble, like adding a coffee bar, and they thought that was going to help when Amazon was going online selling books. So I think it's the same thing. But there were probably people that were like, "Oh, this is a great idea. We should do it too," and the company didn't do it, so they just left and went and worked for Amazon. So I think, I think that's kind of what you're going to see in this industry. And I think you're starting to see now, again, there's less risk or perceived risk involved. So obviously there's not as much upside, right? If you're a later mover, but you're seeing a lot of Wall Street people now, they're all making moves into these crypto exchanges, and some of them are going to some of the ones they probably shouldn't go work for. They should know better, but they don't understand what it is. Again, there's so much money involved. Like it's hard to sort of see, well, and again, you'll see people make interesting choices, but you're seeing a big move of people now, unexpectedly, because they get it. Like the banks also are very slow in implementing these new technologies, and the regulations. I think, my understanding of it is the OCC doesn't really want them doing it, so they've made the capital charges really punitive. So it's 1-to-1 capital charge. So by definition, a bank they can't hold the stuff on their own balance sheet. They can't do much with it. So even if they decide to finally get religion and do it. Unlike, what Barnes & Noble could sell books online, there's nothing stopping them. Here, the regulator is saying, no, you actually can't enter into this new industry in a competitive way, right? Which is great for us because we're not a bank.
Yeah. You mentioned a lot of people from traditional finance are entering the crypto space. What's your one piece of advice you would give to that? Let's say somebody today working in a bank wants to make the jump to crypto. What is that one piece of advice you would give to him or her?
I think, and again, I see this, we hire people, again, like I would just tell them like, look, because banks can tend to be very hierarchical, and you put in your time and you're an MD and you get the office, whatever, all this, I don't even know if that stuff still exists, but it was very hierarchical. And I think that crypto is totally flat. I mean, the people running these firms, including ours, they tend to come from fintech, they're technology people, not bankers. And I think that industry operates very differently than financial services. So I think the gene code is very different. I think you have to be an entrepreneur. So like, look, at Bittrex Global, when it started, it was very small. Like I would joke, I was the CEO. I would unpack the box and do set up the computer. There's no IT department to do that for you. So if you have heirs and you think that you're above doing those things, like this isn't the industry for you. Like this is like still these are kind of startup companies, even the ones making like on paper a lot of cash. Like you'd be surprised. So I think if you're entrepreneurial self-starter and you kind of I always like doing that stuff. I think it's fun. So I think it attracts a certain gene code. So if you like your formality and structure, like it's not for you. It's a totally fluid industry. It's totally new. It's totally changing every day. So if you like that kind of thing, and I think people on trading floors or hedge funds, like that's kind of more the gene code anyway. You're in markets, they're very volatile. I think if you're a stodgy investment banker and you like your formality, forget it. I don't think this is for you. But maybe it is. I don't know. I don't think so.
No, but I think there's definitely this entrepreneurial element in the world of crypto, right? I think that's you're definitely seeing that. Even with, I think people in the banks who are trying to push crypto, there's obviously this element that is very, very important. The entrepreneurial bug.
Well, they know their clients are all doing it. They don't have a choice, so they have to either they begrudgingly offer a way for the clients to keep the AUM with the bank or not. But I mean, it's skewing things. Like right now, like lending tokens, like right now, there's no market to lend out Bitcoin because the banks will pay you to take their Bitcoin because they need to get it off balance sheet because the regulator doesn't want them holding it. So they've only really entered in Bitcoin, a bit into ETH, just the kind of larger asset classes where the institutions are now starting to allocate a little bit, a few institutions. So that's kind of what they're doing. And it's interesting to see when you have these regulatory things that create interesting arbitrage opportunities or skew markets. And it's all very new.
I mean, last question, Stephen, before we move on to our five round of questions. I mean, when do you think it will happen? Obviously, a lot of bulge bracket banks that we're seeing now are making baby steps in crypto. You mentioned some of them. There's a lot of maybe regulatory or balance sheet let's say, requirements that go against them holding crypto. But do you think in the next 5 years we will have every major financial institution have a crypto offering, both for the investment bank and the private bank, or do you think it will take longer?
I think in the next 5 years, they'll be doing something. I mean, it may just be basic stuff like offering Bitcoin. I mean, at the very least, they'll be able to buy Bitcoin and Ethereum into their accounts. I mean, that for sure. I think how much they embrace it will depend on, not every institution will adopt new technologies. The ones who do obviously will do well. I think you'll see acquisitions where they just realize they're never going to be able to build it and they'll just buy it. But I think that's going to be determined. The regulator is going to have to move because right now it's too punitive. So even if they bought something, if it's owned by like for a U.S. bank, it doesn't matter if it's in London, it's still a U.S. bank. So the regulatory capital requirements imposed by the OCC will dictate like how the economics of that work. That has to change. Like right now, they've made it totally uneconomical for them to do it. Like you're not incentivized to be in that. So they're begrudgingly doing a bit just to keep their existing clients for their normal stuff happy. So maybe it's even like a loss leader. They just have to do it to engage with the hope that over time, and that's usually what happens with these new things, like they lobby and eventually they get, enough of them want to do it, then the government has to kind of go along. So I think that's what I end up seeing. Like I expect the banks to be much more active in 5 years.
I think you're right. When a customer wants it, and at one point you got to offer the product, right? If not, they're going to lose.
Yeah, they're not doing it because they want to; they have to.
Yeah, exactly. And I think kudos to a lot of the clients who have put pressure on a lot of these organizations, right? And obviously that's driven a lot of interest in the space. So, Stephen,
because they don't want to trade. If you're like a traditional hedge fund, they like a counterparty risk or their things like operational risk and the jurisdictions. Like if it was another like a bank in the Seychelles or the Bahamas or a bank that says it's jurisdicted nowhere, right? We don't operate anywhere. Like, great. You're not going to trade with that. Like that's too much operational. I mean, it's just silly. Like, why would you take that kind of risk? So I think people aren't in the crypto industry, just don't understand financial services. Your previous question, they don't understand the other risks they're taking. So it's not risk-free rent to trade with some of these platforms. It's fine until there's a big crisis and we're, in an environment where clearly there's going to be another kind of like event. Right? It's just going to happen. I mean, there's so much volatility right now. And that's, 2008, people lost money on counterparty risk. It wasn't like that they had bad trades on. It's just if you had it with Lehman and they went under and they couldn't fulfill the trade, like you lost all your assets or you didn't look at how you were custodying it. They had omnibus account and they could take your asset and then, in bankruptcy, it wasn't yours. So I don't think people understand those types of risks that they're taking with some of these crypto platforms that, and the crypto platform providers just haven't, these are such new technologies. They didn't go through 2008. So we don't know how they're going to be resilient or not. And that's when you sort of see who's got, when the tide runs out, you'll see who's actually got their shorts on.
But what do you think the industry, a lot of these traditional players who are entering crypto are discounting this counterparty risk element? Do you think it's because they think this is the way?
No, I don't think they are. I think it's most of the players in the industry. It's a parallel industry. It's like just crypto only people, right? Some of them are financial guys who've moved over. I mean, they get those types of risk, and I'm sure they're not taking those risks with these platforms. I think it's global retail, right? Doesn't understand the risks they're taking, and a lot of these are like kids, So again, it's a lot of people in trading, but small sized, and those are the people that are going to get burned. It's the retail people, not the institutions.
Well, Stephen, we're at the time that my favorite Bell is with me. We're going to go through a quick, rapid round of questions, and the Bell is going to keep us honest. I'd forgotten my hotel room for a couple of the last shows, but now it's back with me. Hope you're ready, Stephen.
I'm ready for the Bell, Henry.
Let's rock and roll. Stephen, if you're not in crypto, what other industry would you be in?
Traditional finance.
Not surprised. What's exciting you the most when you think about the future of crypto?
Security tokens.
Oh, really? Exciting you the most? Interesting.
I think security. I think the applications of that.
Let's do some personal stuff. What's your favorite thing to do on weekends when you're not working?
Sleep.
Favorite Netflix series or YouTube series you recommend anybody to watch?
I'm watching We Crash on, it's Apple TV. It's the same thing, but I'm watching that right now. I think there's a lot of interesting parallels. The messianic leader of that company reminds me of some of the crypto companies I've seen, not ours, of course.
Oh, that's awesome. Stephen, what is the one course you recommend every student takes in university?
Economics.
Why is that?
Well, I think if you don't understand economics, that's how the world works. I mean, if you're a capitalist, that's it. If you're a socialist, I guess it doesn't matter.
Okay, moving on. Steve, you worked in the hedge fund world for many years. What hedge fund manager would you love to hire as an intern?
None. They're too high maintenance, a hedge fund CIO. And that's a compliment to them. They're great at what they do, but they'd be terrible interns.
I love it. Your nephew comes to you and tells you he has a couple of job offers. One is a large technology firm. One is a traditional financial institution. And one of them is a startup. And the other one is like academia. Which one you recommend he takes?
Startup.
Why is that?
Because you're going to learn a ton. It's not about maximizing cash. Like, you just want to go out and learn as much as you can. And you learn so much more in these entrepreneurial things. And I think today's world order has totally changed. I think it doesn't matter. No one cares how long you've worked at a bank. It's a kind of, no one cares.
You have the choice to launch one crypto startup, and the choice of these co-founders, Vitalik Buterin, Elon Musk, Mark Zuckerberg, or Kim Kardashian. Which one do you prefer?
To do a crypto startup?
Yep. Oh, let's say startup generally.
Elon Musk. Look, he's the richest guy on planet Earth. A smart guy, seems fun and disruptive, and I think that's what he gets crypto as well.
It's interesting, Steve. I've been asking this question to other CEOs. It's always Elon Musk. It's incredible the gravitas that he has within the leadership community. Last question, Stephen Stonberg, the CEO of Bittrex Global. Stephen, if you could have lunch with one person, dead or alive, who would it be?
That's a tough question. You, of course.
I appreciate it, but
whoever's hosting the podcast that I'm asked that question on, the answer will always be the podcast host.
What a diplomat. Well, Stephen, thank you very much for being with us. Where can people find out more about you? How can they follow some of the work you're doing?
Well, I think it's not so much about me; it's about the brand and the company. It's Bittrex Global and our founders, who are quite well known in the industry. So I'd say go to our website, global.bittrex.com if you're outside the U.S., and it's bittrex.com in the U.S. And check it out. We've got everything up there.
Excellent. Well, Stephen, thank you very much. That was Stephen Stonberg, the CEO of Bittrex Global. Thank you, everybody at home, for listening again. And again, if you like this podcast, I would really appreciate if you can give it a nice rating. It would really help when more people discover the show. And make sure to subscribe so you know next time an episode comes out and you don't miss it. Again, if you want to stay on top of the latest developments on crypto and the future of money, make sure to follow me on LinkedIn, on Twitter. I have my weekly show, my weekly newsletter is coming out. And also, if you're looking for some gifts, for anybody who wants to enter the space, take a look at my latest online course on crypto on Udemy. It's called Introduction to Bitcoin and Crypto Assets, where I really summarize in 90 minutes all the latest global crypto trends that you need to know, from Bitcoin, Ethereum, to stable coins, DeFi, CBDCs, Web3, Metaverse, and all these exciting topics are coming up. Thank you very much, everybody, for being with us. I really, really appreciate it. And thank you very much, Stephen, for being with us today as well. And thank you for joining us on another episode of the Future Money Podcast. See you guys all next time.